In this video, we are reviewing SuperTrend, one of the most popular trend-following indicators on TradingView. The basic idea behind SuperTrend is very simple. It tries to answer one main question. Is the market currently trending up or trending down? Instead of trying to predict price directly, SuperTrend follows price using a dynamic line that moves above or below the candles. When the market is considered bullish, the SuperTrend line usually appears below price. When the market is considered bearish, the line appears above price. So visually, it works almost like a trailing trend line. When price is moving strongly upward, the indicator attempts to stay below the market and act like a kind of dynamic support area. When price is moving downward, it flips above the market and acts more like dynamic resistance. The key concept behind SuperTrend is volatility. And this is where ATR, or average true range, comes in. ATR is a volatility indicator. It does not tell us whether the market is going up or down. Instead, it tries to measure how much the market is moving on average. So when price action is calm, ATR is lower. When price action becomes more aggressive, ATR becomes higher. This matters because markets do not always move with the same intensity. A small pullback in a quiet market might be meaningful, but the same size pullback in a highly volatile market might just be normal noise. So the theory behind SuperTrend is that a trend should not be judged only by whether price moved up or down. It should also be judged relative to how volatile the market currently is. That is why SuperTrend uses ATR to create a volatility-adjusted boundary around price. When volatility is high, the SuperTrend line gives price more breathing room. When volatility is low, the line stays closer to price. The goal is to avoid treating every small movement as a trend change, while still reacting when price moves far enough to suggest that the current direction may no longer be valid. So, when the SuperTrend changes from bearish to bullish, traders often interpret that as a possible buy signal. When it changes from bullish to bearish, traders often interpret that as a possible sell signal. But it is important to understand what this indicator is and what it is not. SuperTrend is mainly a trend-following indicator. It is designed to work best when the market is actually trending. Its purpose is to help traders stay on the right side of a move and avoid constantly guessing every small pullback. It is not really designed to predict reversals before they happen. It usually reacts after price has already moved enough to confirm a direction change. That means SuperTrend can be useful in clean trending markets where price continues moving in one direction for a while. But in sideways, choppy, or ranging markets, it can produce repeated flips, giving buy and sell signals that may not lead anywhere. So, the core idea is this. SuperTrend tries to simplify trend direction into a clear visual signal: green or bullish when price is trending up, red or bearish when price is trending down. It gives traders a simple way to read market direction. But like any trend-following tool, its quality depends heavily on the market conditions. In strong trends, it can look very clean. In sideways markets, it can become noisy very quickly. So in this review, the main thing we need to examine is whether SuperTrend is being used realistically, as a trend-following tool, not as a magic buy and sell system. Before looking at any logic, let's first judge SuperTrend the same way most traders would judge it, by simply adding it to a TradingView chart and looking at what it shows. Visually, the indicator is very easy to understand. You get a green line when the market is in a bullish state, and a red line when the market is in a bearish state. When the trend changes direction, the indicator places a buy or sell label on the chart. So from a first impression point of view, this is a clean indicator. It does not overload the chart with 5 different panels, dashboards, tables, clouds, or dozens of conditions. It gives one main message. Green means bullish, red means bearish. That simplicity is probably one of the reasons SuperTrend became so popular. On the chart, the line also behaves in a way that is intuitive. During an uptrend, the green line trails below price. During a downtrend, the red line trails above price. So even without understanding the formula behind it, a trader can quickly understand what the indicator is trying to say. The buy and sell labels are also easy to read. There's no confusion about what the signal means. A buy appears when the indicator flips bullish, and a sell appears when it flips bearish. However, the clean look can also be a little dangerous. When you look at a historical chart, especially a strong trending move, SuperTrend can look extremely good in hindsight. You see a buy signal, price trends upward, the green line follows price, and it almost looks like the indicator captured the whole move. But this is where we need to be careful. A trend-following indicator will often look excellent after a clean trend has already happened. The real question is what happens when the market is not trending cleanly? And we can already see that in the more choppy sections of the chart. When price moves sideways or keeps reversing, the indicator starts flipping between buy and sell signals. The chart is still readable, but the signals become less meaningful because there is no strong continuation after some of the flips. So my visual first impression is this. SuperTrend is clean, readable, and beginner-friendly. It gives very clear bullish and bearish states, and the signals are easy to understand. But it can look much better in hindsight than it may feel in real time, especially during strong trends. In choppy markets, the same simplicity can become a weakness because the indicator may keep flipping without giving enough context to judge signal quality. As a chart tool, it looks good. As a complete trading decision system, the visual information alone is not enough. Now, let's move into the source code review. The good news is that this script is open source. We can actually see what the indicator is doing. It is written in PineScript version 4, so it is not using the newest Pine version, but that alone is not a problem. Pine v4 is older, but still perfectly capable of building a simple indicator like this. The first thing I want to check in any TradingView audit is whether the script is pulling data from another time frame using request.security, or in older Pine versions, security. In this script, there is no security call at all. That is important. A lot of repainting or misleading signal issues come from pulling higher timeframe data into a lower timeframe chart, especially when the script uses lookahead incorrectly. The major red flag would be something like lookahead equals barmerge.lookaheadOn, because that can allow future higher timeframe information to appear earlier than it should. But this script does not do that. The next thing I check is whether the script uses repaint-prone methods like pivots, zigzags, centered calculations, future bars, or delayed confirmation logic. This script does not use pivot high, pivot low, zigzag logic, or future candle references. That means it is not doing one of the common tricks where a signal is only confirmed several candles later, but then plotted backward on the historical pivot candle. That kind of behavior can make an indicator look much better in hindsight than it would have looked in real time. Here, I do not see that issue. The basic signal logic is much simpler. SuperTrend calculates an upper and lower volatility band using ATR. Then it tracks whether price is currently in a bullish or bearish state. A bullish signal appears when the trend flips from bearish to bullish. A bearish signal appears when the trend flips from bullish to bearish. Now, let's talk about alerts. The buy alert uses the same buy condition that plots the buy label. The sell alert uses the same sell condition that plots the sell label. So the alert logic does match the plotted signals. That is good. However, the script does not explicitly force alerts to trigger only after the candle closes. Because the script uses the current candle's close, and because the live candle is still moving, the signal can be provisional during an open candle. For realistic trading, the safer approach is to treat SuperTrend signals as confirmed only after the candle closes. And if using alerts, the alert should ideally be set to trigger once per bar close. That way, you are not reacting to a temporary intra-bar flip that may disappear before the candle is finished. This script is an indicator, not a strategy. It does not include proper backtest logic. There are no real entries, no exits, no position sizing, no fees, no spread, no slippage, no stop-loss model, and no take-profit model. So the buy and sell labels on the chart should not be confused with a tested trading system. A buy label only means the indicator flipped bullish. A sell label only means the indicator flipped bearish. It does not tell us whether the trade would have been entered at the candle close, at the next candle open, with limit orders, with market orders, or with realistic trading costs. This matters because visual signals can look much cleaner than actual executable trades. So the indicator has no way of knowing whether a signal is happening in a strong trend, inside a range, near liquidity, near resistance, or during low-quality sideways price action. That explains why SuperTrend can look excellent during clean trends, but can struggle badly during choppy markets. Now, let's quickly go through the settings, because SuperTrend is a very simple indicator, but the few settings it has can change the behavior quite a lot. The first setting is Indicator Time Frame. By default, this is set to Chart, which means the indicator calculates directly on the time frame you are currently viewing. So if you were on the 5-minute chart, it calculates from 5-minute candles. If you were on the 4-hour chart, it calculates from 4-hour candles. For most users, leaving this on chart makes the most sense. The next setting is ATR period. In the default version, this is set to 10. This controls how many candles are used to measure average volatility. A lower ATR period makes the indicator more sensitive because it reacts faster to recent volatility changes. A higher ATR period makes it smoother because it looks at a broader volatility average. So if you lower the ATR period, you may get faster signals, but also more noise. If you increase it, the indicator may become more stable, but it may also react later. The next setting is ATR multiplier. This is one of the most important settings. In the default version, it is set to 3. The multiplier controls how far away the SuperTrend line sits from price. A lower multiplier brings the line closer to price. That makes the indicator more sensitive, so it can flip direction faster. But the downside is that it may also generate more false signals in choppy markets. A higher multiplier pushes the line further away from price. That makes the indicator slower, but it can filter out more noise. So this setting is basically a sensitivity control. Lower multiplier means faster but noisier. Higher multiplier means slower but smoother. The next setting is source. By default, this is set to H plus L divided by 2, also called HL2. That means the SuperTrend bands are built around the midpoint between the candle high and the candle low. This is a common default because it avoids using only the close and gives the indicator a slightly more balanced price reference. You could change the source to close, open, high, low, or another price source, but for a standard SuperTrend setup, HL2 is a reasonable and common choice. The next setting is Change ATR Calculation Method. This controls how the ATR itself is calculated. When this option is enabled, the indicator uses the standard ATR calculation method. When it is disabled, it uses a simple moving average of true range instead. This can slightly change how responsive the SuperTrend line is. For most traders, leaving it enabled is probably the normal setting, but it is still worth knowing that this option can change the signals. Now that we have reviewed the visual behavior, the settings, and the source logic, let's score the indicator. But before giving the score, I want to make one thing clear. I am not scoring SuperTrend as a complete trading system. I am scoring it based on what it actually is, a simple ATR-based trend-following indicator. That distinction matters because SuperTrend is very strong in some areas and much weaker in others. As a transparent chart tool, it scores well. As a standalone buy and sell strategy, it scores much lower. My final score is around 7.2 out of 10, and I think that is a fair score for what this indicator actually is. SuperTrend is not a bad indicator. In fact, as a simple trend-following tool, it is quite good. It is open source, easy to understand, visually clean, and the logic is straightforward. It does not show the major red flags I usually look for, like future-looking logic, pivot back plotting, zigzag repainting, or higher time frame look-ahead abuse. So from a transparency and code integrity perspective, this indicator is solid. But the reason I am not scoring it higher is because SuperTrend is often misunderstood. A lot of traders see the buy and sell labels and treat them like direct trade instructions. That is where the problem starts.
A buy label does not mean price is guaranteed to continue upward. A sell label does not mean price is guaranteed to continue downward. All the indicator is really saying is price has moved far enough to flip the ATR-based trend state. That is useful information, but it is not a complete trading decision. The best way to use SuperTrend is as a trend filter.
And that wraps up this SuperTrend indicator audit. If you use this indicator, let me know. How do you use it? I would love to hear your thoughts. If you found this review useful, consider liking the video and subscribing to the channel. It helps support more detailed indicator audits like this one. Also, let me know in the comments which TradingView indicator you want me to review next. Thanks for watching, and I'll see you in the next audit.